Greetings, welcome to the Wealth for Real YouTube channel. I'm your host, Christopher Anastasio. Today I'm going to talk to you about the newsletter that I get from Goldsilver.com, Mike Maloney's website. And I actually, for those of you who are following me across platforms, I actually posted a brief, 60-second or so TikTok about this newsletter a couple of days ago. I think it was yesterday or maybe the day before. So if you saw that over there, I'm just kind of expanding on this a little bit here, but I did want to make, for you guys on the YouTube channel, a video about this. I think this is a super, by the way, guys, I haven't been getting this for very long. I've been aware of Mike and his channel, the YouTube channel and the website for a little while. I've been raving about his YouTube video series about, sound money and the Federal Reserve and all that wonderful stuff. It was only when I went to buy gold from goldsilver.com that I ended up sort of like signing up for their newsletter so I could get the discount code and all this stuff. And that's when I started receiving this newsletter. I think this was like the first or second iteration of it that I've received. And I just kind of want to show you guys what's in it. And there's a couple of data points in it that are kind of worth their own discussion. So anyway, guys, so this is straight from Goldsilver and Mike Maloney. You can see, here addressing newsletter subscribers, talking about October 9th, 21 years ago, NASDAQ dropping to 1114. This was in 2002, I believe it was. Anyway, so starts off with a little intro there about, how gold then began its ascent from the early 2000s to go up over 400% since then. So there's that. And then, this is what I think you guys would really cue off of and that I did that I wanted to share with you in this video. Right here at the top of the newsletter, these sort of 5 nuggets, as he calls them, pardon the pun, that have relevance to the economy, finance, precious metals, etc. And you see here, first one up, U.S. economy added 336,000 jobs in September, outpaced expectations, strengthened optimism that we'll get to a soft landing. Personally, and, compared to the experts, I know nothing, but I will say to you guys that I am beyond convinced that there will be no such thing. There can't be such a thing. If you look at if you look at and understand the true nature of our system, we can't have a soft landing. We have an artificial driven economy through artificially set interest rates that create the boom bust cycle. That means that you have to have busts, right? You have to have noticeable, painful busts to balance out the booms that are created by this artificially set interest rate policy. So there was this data point here. You see it comes down here. Interest payments exceed defense spending. This is absolutely staggering. I mean, this alone could spark 20 videos, that I could end up creating and ranting about. But the fact that the government now spends more to pay interest on that $33 trillion than it does on national defense per the Treasury, this is the Treasury kind of reporting this, is beyond staggering. I mean, it should absolutely make your head swim. To hear stuff like that, because it's just, it's not so much about the defense budget, which probably, make an argument that's too big, but it's more about the scale effect, like seeing the sheer scale of this thing reach these heights and start surpassing these other budget items. It's just, it's sickening. Item 3, Ray Dalio sees a U.S. debt crisis coming. This is actually one, guys, that I mean to dig into and make more videos for you about. I have respect for Ray Dalio. I mean, I'm not a huge fan or follower of him, but I did read his Principles book. I think the one that came out in like 2017 or 18 or 19, around that time frame. Good book. I mean, I will say he had like 400 principles in there. It's not a very simple system that he created for his principles. I'm not sure how practically useful it really is, but the book was interesting. I do find Ray Dalio's story and his arc and what he did at is it Bridgewater or I forget the name of it now. Whatever the hedge fund is, the asset management firm that he created. The way they do, extreme candor, and they tell people how much they suck right to their face. It is kind of an interesting concept how they do things at Ray Dalio's firm that I think he's now retired from. But this subject here. We're going to have a debt crisis in the country. How fast it transpires, I think, is going to be a function of that supply-demand issue. So I'm watching that very closely. This is really something I definitely need. I have to make a mental note to dig into, see what is he exactly saying and what does he mean by this and stuff. So look out for that, guys, for this to come in the near term. Fourth up, a surge in American debt. Delinquencies on this is definitely an eye popper here too that I want to dig into. Delinquencies on auto loans, credit cards, consumer loans reached a 10-year high. As interest rates rise, experts predict further financial strain. So again, it's this false sort of economy we have where people feel like they're upper middle class or middle class. They can buy things, they can consume things, and go on vacation, but a lot of things are purchased with credit that carrying that credit balance at, when interest rates were, 1, 2, 3% wasn't so bad. But now that interest rates are getting into the 7, 8, 9 range, well, then the interest rate on their credit card is now in the 11, 12, 13, 14, 15% range. And that's probably a pretty good number. Could be worse than that for certain people's credit and stuff like that. So this is a topic in and of itself that I need to dive into and look a little closer at as well. But we're really looking at a cascade effect here, guys, that, one domino sets it off, but you have all these types of things that can happen down the line with auto loan defaults, hurting the auto industry, hurting the banks that lent the money, credit card defaults, hurting the banks and the companies that, are behind all this stuff. So this is really kind of an interesting one. And then the fifth one, it was 5. Yeah, gold rises after the attack on Israel. Precious metal gained over % on Monday as financial markets anticipated volatility. So don't know where this kind of landed since then. I do think gold has been sort of steadily ticking up this week. But, of course, the news on Saturday was nothing anybody wants to see. But, just looking at it from a financial perspective, this is what happened. Gold jumped. So, kind of feeling good that I bought gold the week before that happened. I mean, I guess it was late September, early October that I finally bought some gold, and then this happened. So this is the last data point here. And you can also see like they go into some real exposition here. Talk about .com mania, Fed steps in, gold offers hope, QQQ. So this kind of like breaks down the intro. If you guys look at the intro here about the NASDAQ dropping on October 9th, 2002, they give you like a little bit of backstory on it here, which is kind of nice and kind of interesting. And then they got the call to action here. So anyway, guys, didn't want this this video to go on too long, but I wanted to show you what the Goldsilver newsletter looks like and how helpful it can be for just kind of getting you that quick set of financial news, getting you kind of spun up and aware of some of the big things going on and stuff like that. I certainly find it useful. As you can see, there's at least a few things on here. This one I knew about, this one I knew about, this one I didn't. I want to follow up on this one. I want to dig into deeper, and this one I kind of sort of knew about. But just these 2 data points kind of leading me down some additional educational pathways. So anyway, in the meantime, guys, just for everybody who's supporting the channel, subscribing, watching, commenting, etc., liking, can't thank you guys enough. Super, super, super appreciate it. Here on this October 11th, I don't think I said the date at the beginning of the video. Here on this October 11th hump day, as we get closer to the weekend. Thank you so much, guys, for supporting, checking in, watching the video. For first-timers, thank you so much. If you haven't hit the subscribe button, please hit the subscribe button below. And, yeah, thank you so much, guys. We'll be back soon again with some more videos on some of these topics. And in the meantime, hope everybody has a great night. Until next time, we'll talk to you guys later.